minutes. Okay, streaming now. Streaming now. Streaming now.
It hasn't started though.
Oh, start webinar. Okay, start. Okay, then just in case if your questions come out here, you can see it over here. Yeah, all the participants here. Let's move this. Okay, I think you can begin. Okay.
Okay.
Okay, cool.
Thank you. Hi everyone, welcome back to our Monday weekly forecast. So we're just gonna give a couple more minutes for more people to join our webinar, then we can begin in a short while. So in the meantime, if you have any questions or anything you want to let me know or any requests, you can just pop it in the chat. Okay, so we'll be beginning in a couple of minutes. Just waiting for a few more people to join our session, then we can begin. Okay, so we're just waiting for a few more people to join. Maybe like give it 3 more minutes, then we will begin shortly. So in the meantime, if you have any questions or anything you'd like to let me know or any requests for any charts, you can just pop it in the chat and then we will go through them once the webinar begins. Okay, so I think we'll begin the webinar now. So how's everyone doing today? Good. Okay, that's great. Happy Monday, everyone. Hi, happy Monday. Okay, great. So, so welcome back to our Monday live trading session. So we'll be talking about the key fundamental news events to expect for the week ahead, along with some of their technical setups. So we'll be highlighting key news events, central bank notes, and key support and resistance levels to watch out for. Anyway, disclaimer as usual, the webinar is purely educational and nothing in this webinar should be construed as investment or trading advice. So please do your own due diligence before trading. Okay, this will be the team that will take you through our webinars. So we have Desmond, who is our CEO and Chief Trader, along with Cassandra, Joanne, and myself as the firm's investment analysts. So if you have any questions throughout the webinar, I encourage you to send them in right away, as I literally have another screen monitoring our questions. So this webinar is brought to you by Everest Fortune Group in collaboration with Vantage Markets. So an award-winning research firm and finalist in 2019, 2020, and 2021 for Best FX and Equity Research. So we work with major financial institutions to help them forecast where the markets are heading. And now we have a special partnership with Vantage Markets where we're bringing you guys the good stuff every day. Okay, without further ado, let's begin. So what happened across our Asia session this afternoon? So with no major news release during the Asia session, markets remained in consolidation with the DXY trading just above the 104.8 level. So what does this mean for the Europe and US sessions? In the lead up to the European markets opening, the US dollar lost ground against most currencies as prices moved to test near-term resistance levels. Liquidity for the US session is expected to be low, with the US on an Independence Day bank holiday. So now let's move on to our first currency, the dollar index. So here's our DXY update. So there were no key news events for today other than it being a US bank holiday. And despite Friday's US ISM manufacturing PMI being released at 53, expected 54.6, a 2-year low, the data still signals consecutive growth over 25 months. Moreover, markets are pricing further policy tightening to come from the Federal Reserve. However, with the 4th of July bank holiday, the DXY is likely to move with more volatility with a brief test lower. Price is expected to continue the general trend upwards to retest the 105.3 resistance level. So for central bank notes, forecasting 75 basis points hike at next meeting, and the next meeting will be on 26 July 2022. Balance sheet reduction plan to continue at 60B in treasuries and 35B in MBS over a 3-month timeframe. And the next 24 hours bias is weak bullish. Okay, so now let's take a look at our Dx5 charts. So if you guys have any requests for any currency pairs or anything you guys would like me to go through at the end of the fundamentals, feel free to pop them in the chat and I'll get to it as soon as possible. Okay, why don't we start off first by identifying the trend. So can you guys just let me know in the chat whether this is an uptrend, a downtrend, or whether price is moving sideways? Okay, I'm getting some answers. So we'll just wait a while more for more people to answer. Okay, I think we can all agree this is an uptrend. So let me remove my indicators. So since we know this is an uptrend, let's start off first by drawing our ascending trend line. So always remember, for a valid trend line, it has to touch 3 significant swing lows. You can see over here. So that's how you know it's a valid trend line. Okay, so now that we have our general trend, we can move on to identify our support and resistance levels. So let's start off with our support levels. So for our support, we want to look for the swing low that is closest to current price. Okay, and I want to pull it back to this point so that it touches multiple swing lows. Okay, so now we'll move on to look for our resistance levels. Okay, so we can see over here, let me label it. So my first resistance is in line with 3 swing highs. 1, 2, and 3. Okay. So now we can look for our second resistance, which will be our stop loss. So I'm going to pull up my Fibonacci levels to help me with this. So firstly, I can see there's a projection over here. So for projection, you want to use these 3 levels. Okay, and then now I'm going to look for a retracement. So we use these 2 levels for our Fibonacci expansion. And how you know there is an expansion is when you have a flash kind of symbol. Okay, let me draw it for you. Okay. So as we can see over here, we have 2 levels lining up nicely. And I have another projection level lining up nicely over here. My 78.6 projection. Okay, so now that I have 3 levels over here lining up nicely, we can, let me clear this first. Okay, let me highlight this area. And this is a confluence area. So when you have two or more Fibonacci levels lining up, it forms a confluence area, and reversal is likely to happen at this area. So I'm going to put my stop loss a little bit away from my confluence area. Okay. So I have because price is moving upwards, it is also moving in an ascending trend line. We have a bullish bias that price will continue to rise to this level, but only when it reaches this our first resistance. Okay, so now that we've settled our Fibonacci levels and the support and resistance lines, now we can pull out some indicators to support our analysis. So here I have my Ichimoku cloud. So we're just going to see if price is moving above or below. So here we can see price is moving above the Ichimoku cloud. So it supports our bullish bias. Okay, so maybe I'll try another indicator. Okay, we can see on the RSI, price is also moving in an ascending trend line. Okay, on our MACD, you can see a bearish momentum over here. So it does not support our analysis. So we can get rid of that. Okay, so we're done with our first chart. Does anyone have any questions? Okay, if not, let me just check. Okay, if not, we'll move on to our next fundamental. So next we have the Japanese yen. So there was no major news for the Japanese yen. And what can we expect? Further yen weakness seems to have stalled, despite recent US dollar strength as markets post increasing concerns on a global recession, with capital flows shifting towards the reserve currencies. As the dollar JPY sits at the 150 level and without major news drivers to push price higher, anticipate increased volatility with limited directional bias. The dollar JPY is likely to continue trading in a wide range between 135.7 and 134.9. For central bank notes, kept all policy settings unchanged at their June meeting, reiterated that rates will stay low for the foreseeable future and won't hesitate to add stimulus if the economy needs it. Next meeting will be on 21st July 2022. And our next 24 hours bias is weak bearish. Okay, so now we'll quickly go through our dollar JPY charts. So here's our dollar yen chart. So really quickly, can you guys tell me in the chat whether this is an ascending or descending trend? Okay, uptrend. Yeah, so now let's draw our ascending trend line. Okay, so we can see that price has broken our ascending trend line a little bit over here. Okay, so we can call for a sell. So now let's pull out our resistance and horizontal levels. So this would be my resistance level or stop loss. And for my entry over here, and my take profit over here. Okay, so now let's pull out our Fibonacci levels to support our analysis. So here are the levels that we use for our retracement. Okay, I can see my 23.6% lines up with my sell entry. And then I will put a projection over here. Okay, I can see my 100% lines up with my take profit. Okay, so now we'll pull out some indicators. So here I can see price is moving below my Ichimoku cloud. So it's bouncing off, which suggests a bullish momentum. So we can get rid of our Ichimoku. Let's try RSI. Okay, so for RSI, we can see there is a bearish momentum. So here on our price, it shows an ascending trend, whereas on our RSI, it shows bearish divergence. So it supports our analysis that price will drop. Okay. Okay, let's go back to our fundamentals. So next we have gold. So for gold, there was no major news events. And what can we expect? On Friday, as the US dollar strengthened back towards the recent highs, gold lost significant ground, reaching 1785 briefly before rebounding. With no significant news ahead and further Dx5 strength anticipated, look for gold to continue with this move towards the downside, especially if it signals a reversal from the current resistance of 1800. And our next 24 hours bias is medium bearish. Okay, so let's take a look at gold. Okay, let's quickly go through gold together. So from our fundamentals, we have a bearish bias for our next 24 hours. So similarly, if we take a look at our chart, we can see a general downtrend for gold. So I can see a descending trend line over here. And now let's plot our resistance and support lines. Okay, I can pull back my resistance all the way to here. This is my pivot and this is my first resistance. Okay, so I can pull up my Fibonacci lines now. This is my first support. So I can see my 38.2% Fibonacci retracement lines up with the first resistance. My 100% also lines up with my first support. Okay, I'm going to place my pivot here instead so that it reaches multiple swing lows and it's also a pullback support. Okay. So I can see there's another 100% over here. So the point of highlighting these levels is that it indicates that price is likely to reverse off of these levels and either drop or rise. Okay, now let's pull out some indicators. So with price moving below our Ichimoku cloud, it supports our bearish bias, which is great. And now MACD is showing a bullish momentum. So we can get rid of MACD. Okay, so we have one indicator that supports our analysis. Okay, are there any questions so far? Okay, if there are no questions, let's continue with our fundamentals. So next we have Euro. So there were no major news events for the Euro, and what can we expect? So the Euro USD has experienced significant volatility following the decline from the 1.06 resistance level. On Friday, the Euro CPI flash estimate was released at 8.6%, expected 8.5%, indicating slightly faster inflation growth than expected. This could cause the ECB to adopt a more aggressive policy adjustment in the upcoming meeting. However, the euro dollar is currently trading at 1.0430, and a stronger retrace on the euro dollar is unlikely. Look for the current consolidation to continue as liquidity remains low for today, before a further test lower towards the 1.0366 support level resumes. So for central bank notes, plans to phase out the APP into third quarter remained intact by reducing purchases from 40 billion to 30 billion in May and then down to 20 billion in June. Highlighted risks for the economic outlook are tilted to the downside and have recently intensified with geopolitical and virus-related challenges. Expected to raise rates by 25 basis points after APP ends in July and 50 basis points in September. Next meeting will be on 21st July 2022, and our next 24 hours bias is weak to medium bearish. Okay, we're gonna speed up a little bit. So if you guys have any specific requests for any currency pairs, you can pop it in the chat. Otherwise, I'm going to continue with our fundamentals. And then we will continue with the analysis after that. I'll be going through any of the requests after the fundamentals. Okay, next we have the Swiss franc. So for key news events, For the Swiss franc, it was the US Core Consumer Price Index, MOM. So what can we expect from the Swiss franc today? As the CHF CPI data was released at 0.5%, opposed to an expected 0.3%, the CHF strengthened before quickly giving back the gains. As CPI grows marginally faster than expected, this could reinforce the need for the SNB to firm up on the decision for further rate hikes. However, look for the USD CHF to continue trading within the 0.9520 and 0.9630 range. For central bank notes, surprise rate hike by 50 basis points to negative 0.25%. Next meeting will be on 22nd September 2022, and our next 24 hours bias is medium to weak bullish. Okay, are there any questions? If not, we'll move on to the pound. So there were no major news events for the pound. And what can we expect? So the pound tested 1.1970 on Friday with the biggest quarterly decline since 2009, rebounding and currently trading at 1.2115 with no major news scheduled and the US bank holiday today. The GBP USD is likely to continue the retrace to retest the 1.2180 level. However, further upside on the GBP USD is unlikely with any retrace forming the basis for better selling opportunities. For central bank notes, rate hike by 25 basis points to 1.25% and peak inflation revised to more than 10%, adding to the stagflation fears. Possible GDP contraction in 2023. Quantitative tightening plans to be updated at the August meeting, which will be held on 4th of August 2022. And our next 24 hours bias is medium bearish. CAD-CHF. Okay, sorry, I'm just looking at the chat right now. Yeah, we can take a look at CAD-CHF after we go through our fundamentals. So we'll just go through that really quickly and then we can analyze the charts together. Okay, so really quickly, let's go through the next currency pair. So next we have the Aussie Dollar. So for Aussie Dollar, there were no major news events. And what can we expect? So the AUD has been weighed down by the strength of the USD, downward movement of gold and other commodities. Although there is no news scheduled for today, the RBA is widely expected to increase rates by 50 basis points tomorrow, a slightly hawkish move. This could limit significant downside in the Aussie dollar in the short term, with a brief retrace to the upside towards the 0.69 level expected. So for our central bank notes, there's a possible 25 to 50 basis points rate hike, and next meeting will be on 5th of July 2022. Next 24 hours bias is weak bearish. Okay, now let's move on to the Kiwi dollar. So similarly, there were no major news events. What can we expect? So the Kiwi dollar tested 0.6150 before rebounding back towards the 0.62 level again. Further downside could be expected if the Kiwi dollar breaks below the support again. However, as price reaches a historic low and with its correlation with the AUD, look for a brief spike up to follow any significant move lower. Next meeting will be on 13th July 2022, and our next 24 hours bias is weak bearish. Okay, so next we have the Canadian dollar. So for key news events, manufacturing PMI and Bank of Canada Business Outlook Survey. So what can we expect from CAD today? With the DXY strength during the Friday trading session, the USD CAD climbed to 1.2930 before retracing significantly. Manufacturing PMI and Business Outlook Survey data is to be released today and could indicate a slowdown in the Canadian economy, weakening the Canadian dollar. Look for the USD CAD to complete the current retrace back below 1.29 towards 1.2820 before a retest of 1.29 could be likely. For central bank notes, increasing likelihood of 75 basis points rate hike from Bank of Canada, and our next meeting will be on 13th July 2022. The next 24 hours bias is weak bearish. Okay, lastly, we have crude oil. So there were no major news events for crude oil. And what can we expect? So with Brent currently trading at 114.2 and WTI at 109.7, prices are likely to continue trading within this price range with no clear directional bias. This is following the decision from OPEC to increase oil production levels, providing some short-term relief to the supply constraints and increasing energy prices. Our next 24 hours bias is weak bearish. Okay, so now we'll take a look at some of your requests for our charts. Okay, we have about 15 minutes left. So if you have any requests, feel free to leave them in the chat. Okay, I don't really see any possible trend line. So we'll just quickly move on to look for our support and resistance levels. So Simone, are you looking for a buy or a sell? Looking for a buy. Okay. Okay, based on the charts, it looks like price is definitely moving upwards. So, okay. So I place my resistance over here. You can let me know where you placed your take profit, stop loss, and your entry. 0.785. Okay. Zero point 0.744. Okay, yep. So that's about where I placed my entry as well. Let me quickly zoom in. So this is my buy entry. So you can see for my buy entry, I place it all the way back here because there are many overlaps. So there's a swing low over here, swing highs. So this makes it quite a key level. And this would be my take profit and stop loss. Okay, so now let's pull out some Fibonacci levels. Okay, so I can see there is a 23.6% retracement. Okay, there's also a 100% Fibonacci projection over here. Price seems to have been moving sideways recently. Okay, but now let's take a look at some of our indicators to see if they support our analysis. So I have my Ichimoku cloud over here. Price is moving within the cloud, which could indicate a buy or a sell. Typically, we will only confirm that it is a buy if price is bouncing above the Ichimoku cloud. And similarly, we will only call for a sell we will only use Ichimoku to support our sell if price is moving below. So we can remove our Ichimoku cloud. What indicators do you normally use, Simone? Okay, we can see MACD supports our analysis. Okay, yeah. So moving average is actually also a very common indicator to use. Okay, cool. So we look at price action first. We just pull out some indicators to support our analysis. So the normal indicators that we use would be Ichimoku, MACD, RSI, and stochastic. So maybe now I'll pull out RSI, and we can see for RSI, there is an ascending trend line. So it does support our bullish bias. Maybe I'll try stochastic as well. So for stochastic, we use these settings, 21, 5, and 3. And I can see an ascending trend line as well. Okay, so normally after using our indicators to support the analysis, if 3 out of 4 of the indicators we've used are in line with our bullish view, then we know that our analysis is more or less accurate. If only one of our indicators support our analysis, then there is a chance that price may not move according to our analysis. Okay. So I think this is the chart. Are there any other requests or any other questions? Okay, CAD JPY. Okay, so there's a very nice trend line over here. Another buy. Yep, so it does look like a buy because price, the general trend has been upwards. So it's always important to follow the general trend of the chart. There with others. Yeah, so I'm not so sure about USD JPY. Let me just check. I think for the most recent USD JPY chart, it looks like a little bit of a bearish momentum. Oh, I see. Okay. Okay, we normally use the 4-hour, 1 hour, 4-hour, or daily charts to analyze. Okay, let's go ahead and find our support and resistance levels. Okay, so this would be my take profit. Buy entry and stop loss. Okay, so let's see if I can line up my Fibonacci projection to my take profit. Okay, so I can see here that there are two Fibonacci levels that line up. Okay, so now let's pull out some indicators. So I'm just going to use the 4 that I mentioned just now, and then we'll just see if it lines up. So I can see for my Ichimoku, price is moving above the Ichimoku cloud. So it does support our bullish bias. For our MACD, there is a bearish momentum on our MACD, so it does not support. So we can get rid of that. For our RSI, okay, there is a little bit of a bullish momentum going on here. For stochastic, okay, stochastic isn't really telling us much. Okay, there is a slight increase. So yep, sounds good. Seems like a buy would work for you. Okay. So are there any more questions or anything you guys would like to tell me? If not, it's 6 o'clock. Thank you guys so much for joining me today. I hope you learned something or found this webinar helpful. Yeah, so actually I could place my stop loss over here. But typically, as long as you just want to try and make sure that this area over here, this A and this is B, you want to make sure that A is larger than B. Then that's fine. Okay, so thank you guys so much for joining me today. I hope you guys learned something. And I'll see you guys next week again at our Monday weekly forecast. Okay. Thank you guys. Bye. Have a great rest of the week. Bye, Simone.